Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. It's Macro Monday. Let's take a look at some legacy charts. On the global crypto flows for the week, we were at 1.2 billion. Most of that coming from the United States, most of that coming into BTC. We still don't have a continuous multi-week, multi-month inflow picture, and we're seeing that in price, obviously. Looking at the 30-day cumulative flows, also basically flat here. So despite being up around 10% on the month, 10% from the low, all in all, the flows on a rolling basis still fairly flat, which is kind of crazy to say considering we had a 1.1 billion just in BTC last week. Looking at price today, we rolled over on some Japanese economic manufacturing number last night, pulling up a little bit today. There wasn't an expectation, at least I hope I didn't set this expectation last night, that we would just blast off from 65. What's definitely more likely and most likely is at some point we either wait for the 50-day moving average in the green there to pull up the price, or price meets the 50-day moving average between now and the end of October. And if we're thinking about the election, we could do a bunch of nothing until after the election. That's also a possibility. The more we can hang out at the top of this range, the more we can remain sideways above 60. That's a win. I'll take it. To get denied again, I don't think is anything crazy just yet. I'll mention a low time frame head and shoulders possibility in a second, but we're still above, briefly, at least above the 200-day moving average, still above the 20-week moving average in the yellow, and still far above the 50-day. All this stuff is still crossed bearish, so that's something else to wait and watch for. But just pulling up here and holding up here would be the best sign for eventual strength. And if you don't like the spot BTC chart, I mean, it is kind of a mess. The Bitcoin CME futures chart, BTC1 exclamation point, is the ticker for that. This is a continuous rolling chart of the futures. This chart removes the noise of the weekend. Futures aren't open 24/7, 365. So you get maybe a better signal. Maybe the patterns look a little better. You can probably see the head and shoulders cleaner here. The inverted head and shoulders pretty clean there. Maybe this thing here looks a little cleaner as an inverted head and shoulders. On this chart, the cloud certainly looks cleaner. TK cross, not bullish yet. Cloud, not bullish yet. But maybe for signals, just because the US session is where most of the action happens anyway, this chart is more actionable than the spot index crypto chart, crypto exchange chart. Even something like IBIT, which is effectively the leading ETF, also probably worth taking a peek at based on your favorite trend metrics. How does it look? Obviously, it's going to look similar to the futures chart, similar to the spot chart. So you're not really seeing anything new here. Same thing, right? Potential triple bottom, potential inverted head and shoulders, potential cloud stuff eventually here, as long as we can hold 35 on IBIT. If we look at the 2x ETF, BITX, starting to get into the daily cloud, maybe this acts as a double bottom. Still a little too early to confirm, but again, it's headed in the right direction. This is where we want it to go. We want it to go through the cloud, above the cloud. This is with the dividend adjusted for price. One thing that's interesting is like, okay, if you want access to this, but don't have access to this, you can also just trade SOL and vice versa. SOL, you can see here in the line chart, effectively acting as a 2x BTC, kind of saying it's all the same. You know, alts, as I've said, as many people have said, alts are just leveraged BTC. This is MSTR versus SOL. Very similar chart, MSTR looking much better. What many people have also noticed, MSTR tends to hold the highs on the 2x move and then not give as much back on the downside. And you're kind of seeing this disconnection here against SOL. But MSTR on the daily chart looks great. Bullish TK cross, bullish cloud, price above cloud. Much farther ahead of its double bottom here, back to the top of the range. Similar to SOL, just as it is 180 for SOL, that's what you want to see break on MSTR. Doesn't have to be soon, but there's an expectation within the next 3 months that most of these start to break out. That includes alts, that includes MSTR, that includes 2x BTC, and obviously spot BTC. Before we go any further here, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro with a link in the description of this video. Not investment advice. Crypto trading involves risk of loss. Cryptocurrency services are provided to US and US territory customers by Payward Ventures Inc., PVI, DBA, Kraken. On the spot side on Kraken, this is something to watch out for into October. I'm going to be talking about liquidity today, and liquidity has pulled back because mainly, at least in the United States, the reverse repo stuff has ticked higher, as it usually does end of quarter, as they call it, window dressing type stuff. So despite the Chinese liquidity explosion, we're not really seeing that on the US side. And that's going to change with the quarterly rollover here. But if you're on high leverage, this is something to watch for. If you're on low leverage or no leverage, what do you care, right? You just get better prices below 63. And really, all you care about is holding the range, holding the cloud on no leverage. Doesn't really matter. If we can't make higher highs in Q4 with the liquidity explosion, then there's bigger issues than just holding 63 or not. As far as legacy this week, we've got Fed speak, jolts on Tuesday, more jobs data on Wednesday, and then the final boss of jobs unemployment rate on Friday predicted to be unchanged month over month. You also have ISM on Thursday. Inflation looks fine. This is Trueflation. You can see the massive decline we've seen over the past year. Zooming way out, we are almost back to pre-pandemic, or arguably, I guess we are back to below pre-pandemic on the Trueflation index. And there's a lot of calls for, we're going to see inflation explode again. There were calls for that when the Red Sea was having issues. We did not see that yet. There's going to be calls for that on this longshoreman strike. And if we do see upticks in inflation, this is where you're going to see it. You're going to see it here first on a day-over-day basis versus any other metric. But so far, so good on the inflation front. And if we look globally, regardless of the inflation picture, we're seeing more cuts than we've seen since COVID. Just all the more reason. When you take the rates picture, the liquidity picture, the dollar strength or weakness picture, that's a backdrop for bullish risk, bullish BTC. If we look at the Fed probabilities for rates, 60-40 on whether or not it's going to be a 25 or a 50 day after the election, that's still a long ways away. A lot can change based on the data, but it looks like we're going to get at least another 25. And we can think about the decision tree here. If it's a 50, is that good or bad? If it's a 25, is that good or bad for risk markets? I just think this is, at this point, this is so far away that until we have the data, you could just say everything's 50-50. Okay, jobs flat, jolts up or down, you could bend yourself into a pretzel trying to figure that out. And the election is going to probably take precedent to that. Anyway, look at the inflation data based on the nowcast. We are headed in the right direction continuously. This is the last day for September reading. So we'll get a fresh reading, obviously, for October. But next month's PCE is predicted to come right around 2.0. This month's CPI, 2.25. So based on this, cutting certainly makes sense. I don't know about cutting aggressively, but cutting certainly makes sense based on that. Looking at GDP, GDP looks great. This is not recessionary type GDP. This is not recessionary concern GDP. The next update on this is also tomorrow. So maybe that's something else to watch for this week, along with the jobs data. In the liquidity picture, in the US liquidity picture, money in the reverse repo represents money outside of the ecosystem. It's this inert pool of capital that counts as a negative for liquidity. So to see this rising here towards the end of September, certainly a headwind for risk assets, a headwind for Bitcoin specifically. What we typically see on these quarterly rollovers is a massive spike. So we'll probably see a massive spike today on the print for reverse repo. And then the day after or the week after, that'll come back down. If you combine this with the TGA and the debt ceiling fight and running down the TGA or not, that represents an additional potential tailwind of liquidity throughout Q4. Looking at global liquidity in the green here, that continues highs, continues to make higher highs. Stablecoin market cap also continues to shove along with global liquidity. US liquidity in the white, this is what you're seeing on the reverse repo. You're seeing that get pulled out. This should recover in Q4. And if we do drain the TGA because of the debt ceiling stuff, then we will see, I think, liquidity make a new local high at the very least. Bitcoin and altcoin market caps kind of sticking closer to global liquidity than US liquidity, but collectively here, there's kind of a divergence, right? We're seeing and have seen highs in global liquidity, but we're not quite seeing a breakout in BTC. We're certainly not seeing a mega breakout in altcoin market cap. And of course, US liquidity headed in the opposite direction. So the final nod from US liquidity pulling up, or at the very least returning to local highs versus local lows, is maybe what we need in Q4 and is something to watch for. We of course have the Michael Howell cross-border capital liquidity index and long-term cycle for liquidity. And just as the cycle would predict, we're headed for this upswing. And obviously there's no promises here for anything to happen on the side of risk assets, but it's a question of, would you rather be long or rather be short, knowing this is potentially coming? Torsten Slok at Apollo also put together these charts on the Goldilocks picture, looking at the financial conditions index from Bloomberg. Financial conditions today much easier than they were at the beginning of the Fed raising rates, and you can see financial conditions continuously improving. This is not recessionary. A lot of this, I think, is reverse repo drain. If you look in the numbers, that certainly helped the liquidity picture. Looking at the NBER recession indicators, also we're not screaming a recession. You can see how it's looked previously. So if this is a recession, it would be a recession like none other that we've seen thus far. This is weekly bankruptcy filings also do not look recessionary. So if the data calls for it, when the data calls for it, I'm on board. But that's not what we're seeing so far. Looking at the yield curve continues to meander down here on the low end of the range, at least for the front end, the body, the belly, and the long end, basically kind of just going nowhere here. I think the belly got super optimistic that rates are going to be cut quickly. I think the long end is kind of nervous of issuance and nervous at inflation expectations. So it's hard to think how much lower the long end goes, but generally we're still pretty inverted across the curve. Something like the 10-2 uninverted, but the 10-3 month obviously still inverted. And normalization of the curve is happening, but what you'd expect to see is lower rates at the short end, higher rates at the long end. So in order for the entire curve to be inverted here, we would need to see the front end come all the way down to sub 3.5%, which is, I think, where the eventual expectations are, somewhere around there by mid-2025. So it'll take some time to normalize the curve based on the cutting path probabilities. This is the 10-2 in the white there, definitely uninverted, no doubt about it. Unemployment in the yellow, still fairly low historically, and that isn't really the issue. The issue is this runaway unemployment picture. So if we do see a massive uptick in unemployment, if we do see higher calls for a 50 basis point cut in the next meeting, I would think that risk assets would get angry on that news. They want to see Goldilocks. They want to price in Goldilocks. They don't want to price in a crumbling economy. And this is the 10-3. The 10-3 still very much deeply inverted. Switching gears to the indices, the S&P looks okay. We're still trend bullish. We're not, it'd be one thing if we were below the cloud is bearish, whatever trend metric you want. Yes, we're not making a new all-time high every day. Yes, we've kind of stalled out at all-time highs. Yes, this is a potential setup for a mean reversion to the Kijun, but none of that is bearish. Now we can say a move from 57 to 55 is possible. That's a mean reversion. We could say a move from 57 to whatever the diagonal here, 56.5, whatever. None of that is trend bearish. What I don't like is this on the weekly. I do not like to see price all the way up here so quickly, far above the Tenkan, extremely far away from the Kijun. Even in times of rampant bullishness, we eventually come back down. Now we tested the Tenkan twice lately, 3 times if you include earlier in the year, but even this from 20 to 2021 is extreme, where we are just so far outside of the low time frame moving average. I wouldn't say this is as bearish as a definitive head and shoulders as it was going into 2022, but it's just, it looks overbought. It looks a little tired. It looks a little stretched. Still, sideways would make a lot more sense to me than just continuous melt up explosion here. The Qs look a little different. They aren't as euphoric. They've bounced around the Tenkan a bunch. They're closer to the Tenkan, closer to the Kijun, and you can see historically these Tenkan bounces have been appropriate for bullish expectations. So trend still looks fine, but we are potentially setting up for something here. If we roll over back to like say 450, 430, then you'd have some sort of head and shoulders wedge thing, Not quite as obvious as it was in 2022, but that would suggest a rollover to sub 390, and I can't imagine BTC would be happy on that. On the daily, much like the S&P, nothing here looks particularly angry. We're above the cloud. We're not trend bearish. We're flat. We're below all-time highs. We're stalled out. This might be some sort of bearish bat harmonic or something, but it certainly doesn't look like the tables are going to fall out under us here. I don't think there's a great trade on the indices, on the S&P or the Qs, but I don't think you can just expect this thing to break below 400 as we sit here today. I just don't see the technical evidence for that. IWM also has been just continuous up chop, and I think if you trade IWM in earnest, you kind of just have to have a viewpoint and stick to it. Otherwise, you're going to get chopped to death. But there is certainly a possibility in 2025 for a new all-time high breakout on IWM, and that measures to 300, let's say. I don't know if that's a great trade at the moment, but it's something to watch for into 2025. If this starts to break out, there are a lot of charts that are just sort of hanging out at all-time highs, kind of waiting. Maybe they're waiting for the election. Maybe they're waiting for rates to come down further. Maybe they're waiting for another catalyst. But even NVIDIA, right? Is this bearish? I wouldn't say it's bearish at best. On the bearish argument, you could say, well, this is a 50-50. This is a coin flip. The pattern in and of itself is a 50-50. Coming off of a bull trend, typically it's continuation. The cloud likes it. Where it sits here, you can see the failure conditions, sub 105, sub 106. Cloud will probably flip from bullish back to neutral. But if this breaks out, you're talking about 200. If this breaks down, I'd imagine sub 90 at the very least. But we just aren't there yet. We don't know the answer to this. And the technicals aren't, to me, super clear that this is headed one way or the other. Apple's been a massive mess for me post the initial breakout in May, especially up here. Is this a head and shoulders? Is it a diamond top? Is it now an ascending triangle? It looks probably closer to an ascending triangle. The cloud still says it's fine. And just like the indices are kind of waiting for something, the indices are waiting for these charts to move. The indices are waiting for either the Mag 7 to do something or breadth to widen out more. But if Apple breaks out, the Qs are going to go higher. S&P is going to go higher just because of the dominance in that index. The same thing with NVIDIA. Meta already moving higher. This one looked good for a long time. Held above the cloud, and it's never going to lie to you. It's never going to lie to you in the sense that if there's a bullish breakout expectation, the cloud should be bullish first. It should hold above the cloud for that entire time. So this measures to around, let's call it 675. Microsoft is, again, kind of 50-50. It looks like it could be a bunch of stuff here. I don't think there's a clean read. This might be a low time frame falling wedge here. Cloud doesn't like it yet. And so if we get some clarity on these names, then yeah, I think the indices will do better. Tesla's another one that it's setting up for a multi-year inverted head and shoulders. You've got multi-year Adam and Eve. You've got diamond top negation. You've got head and shoulders negation. Also something to watch for throughout 2025 would be a move potentially to like 480, which would be a new all-time high. So that chart also looks the best it's looked in months. A few other individual names. Uber also still looks fine. You know, it's grinding at highs above the cloud. Nothing crazy. But as we potentially get all of risk assets to grind slowly higher, this would certainly be in the conversation. On the ETF side of things, SMH on the 3-day makes a lot less sense to me to be long up here. It's a 3-day bearish TK cross. And it's saying if you've been long since the cup and handle, if you've been long since the breakout, this is a good time to close based on the cloud parameters. This had a pretty clean case for head and shoulders. Now it's trying to break above the right shoulder, which would negate the head and shoulders. And obviously NVIDIA is a big part of this ETF, but the long side just makes a lot less sense here on SMH all the way up here relative to 150. What I do like is something like IGV just peaking above all-time highs, or at least trying to make all-time highs. This is the software ETF. Has been bullish on the cloud, high time frames for quite some time. You got a cup and handle, and it looks good. It doesn't need to hit 150 tomorrow, but chart looks very clean, very strong for potential highs. PayPal's another one that came out of a mega multi-year downtrend, broke into the cloud, above the cloud, still looks fine, has plenty of room for eventual moves higher. Square, I know another beloved Bitcoin adjacent company, tons of chop here in this range. And you'd think at some point collectively, this would start to look better as long as it can make some higher highs here on the high time frame cloud. But it's been nothing but chop for a very long time. Roblox finding resistance at the highs, but looks great. Ascending triangle. What else do you want? Multi-year, just flat in the range. I still really like this chart. I like how it just is holding this level, just sort of waiting for anything, any sort of positive news, any small catalyst, and this looks ready to go towards highs. Compare that to like XLE sitting at lows, sitting at support in the cloud, not as bullish as it was. You had your breakout and it didn't go anywhere. So if Roblox looked like this, I'd be a little bit more concerned. Whereas the energy ETF just doesn't look like much of anything. As far as the China stuff, you've got KWEB, you've got CQQQ, you've got individual names, obviously like BABA, PDD, a few others. KWEB pulling back up to horizontal resistance. Looks fine. Measures significantly higher, despite pulling up as much as it has. Still has plenty of room to go in 2025. And you can look no further than pre-2020. Pre-2020, kind of this similar style range, similar style eventual move before pulling back significantly. And looking at the liquidity infusion, it would make sense for the China stuff to at least attempt a push higher. This is China's tech ETF CQQQ. Also a similar picture on the cloud here. Breaking out of the high time frame cloud for the first time since 2021. Multi-year drawdown, multi-year just down chop continuously. So I'd love to know where KWEB and CQQQ eventually find support, whether it's at the previous resistance turn support or the key June or something. We'll know throughout the quarter, but this is certainly an attempt at a trend shift for Chinese stonkery. Looking at Bitcoin miners in the tail end here, they all collectively look kind of meh still. They haven't traded great on trend on the daily. You really had to pay attention week by week here. Are we consolidating? Are we trending? Do we have a breakout pending? Is this a potential inverted head and shoulders? Eventually, is this just a vanilla Adam and Eve? Are we just trading in this crazy range back and forth? Cloud doesn't like it yet. It's just hanging out there below the cloud. Some of these individual names look better. I like CORZ personally. It trades more like an AI stock than a Bitcoin stock. But the technicals on this still look fine. Still looks like it wants higher. WULF also trades like this hybrid AI play versus Bitcoin miner play. If I had to pick one based on trend strength, WULF looks certainly better than WGMI and better than most everything else, including Mara, including Riot. All those charts are just sideways chop with no momentum whatsoever. Another one I like is BTBT, just because it's held this range for multiple years here. And if we can get a breakout on BTC, at some point you'd expect miners to catch a bid. So collectively we're watching unemployment or employment data this week. Watch how that shifts the rates probabilities and whether or not risk markets like what they see. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.